I would like to thank the Bitcoin Policy Summit, especially Grant. Grant was actually a student at Johns Hopkins Carey Business School, one of my students. To see him pull off this amazing event like this with his friend, co-founder David Zell is just amazing. This makes this professor very proud, very proud. So my name is Jim Liew. I'm an associate professor at Johns Hopkins Carey Business School. I also run a blockchains and AI company named after my two daughters, Sophie and Catherine. It's called SoCat. And you know, it's really funny, in 2017-18, I proposed this class, cryptos and blockchains, and I got yelled at by, you know, the upper level folks in the business school. But, you know, I kind of stayed at it. They let me teach the course. We dropped the name cryptos. We just called it blockchains. And students loved it. And, you know, on our panel discussion today, you have two professors, three angel investors, the chairman. Where's the chairman? Wait a second, time out. Where's Elijah? Where is he? Where's the chairman? Come on, text the chairman. Okay. Okay, fine. We have arguably the largest Bitcoin miner representing it here. Also, how many lawyers are here? 3, 4. Is the chairman a lawyer?
I'm not.
Oh, you're not a lawyer. Okay. So we have 3 lawyers. I'm not a lawyer either. 1 lobbyist. How many lobbyists are out in the crowd? I'm just curious. Raise your hand. Oh, excellent. Excellent. So as soon as the chairman makes it to the stage, we will start, but I think it's nice for everyone to introduce themselves. So I don't want to sit. I like standing. As a teacher, I'm always standing. When I sit, I feel like I'm going to fall asleep or something, but I'm going to put the chairman right here. So Donna, I know you're you're an adjunct professor at Columbia and Wharton. Columbia.
But my heart belongs to Fordham Law.
What? I went to Columbia in Manhattan, did my doctorate in finance. So the Columbia Business School is, has I really had a great time in Manhattan there. I know that you started also. Why don't you tell us a little bit about your background?
Okay, well, first of all, you can see that given that this is a regulation panel, it's already disorganized. We got one person standing there, one person missing. That's the way regulation works, not all in this country. It's completely disorganized. So we just wanted to get you in the spirit of it along the way. So I come to this area having seen the convergence of technology and business for a long, long time, all the way back to when there were trading floors and people were screaming and yelling. Now you watch Eddie Murphy in trading places. And so we are now at the same kind of a juncture in which there is a dynamic change going on in financial services and financial markets. And what happens? People get scared. And so they want to push back. And what we need to do is keep going forward. And we need to get the people that do legislation and regulation in this country to understand that this is a different set of assets, that Bitcoin is different, that digital assets are different, and that we need to put together a regulatory framework that works, not one that tries to squeeze everything into old boxes that just are tattered and no longer fit this new dimension.
Excellent. And to Donna's left is Zach. Do you want to introduce yourself?
Yeah, my name is Zack Shapiro. I'm a legal fellow at the Bitcoin Policy Institute. I'm also the managing partner of a law firm, Reigns LLP, which represents companies in the Bitcoin and digital asset space. So a lot of my time is spent trying to squeeze new technology into old boxes, as Donna just said. And yeah, I'm hoping to bring a sort of industry-focused viewpoint to this panel and talk about what companies in the Bitcoin space need from our regulators in order to be able to build the technology around this incredible open source technology that Jack Mallers just spoke so well about.
Absolutely. And then to Zach's left is Brian.
Yes, hi everybody. I'm Brian Morgenstern. I'm the head of public policy for Riot Platforms, which is America's largest Bitcoin mining operation. We're publicly listed on the NASDAQ. We've got a great team of people. We're building a very large presence in Texas. Senator Cruz has visited our facility, and we appreciate, of course, his interest in these issues. I started my career working for my congressman on Capitol Hill. I then went to law school at Columbia in New York.
Awesome.
Practiced there for 7 years. I came back down to DC. I worked in the Trump administration at the Treasury Department and at the White House. And now I'm trying to help Riot to navigate this public policy landscape and to help educate our lawmakers and our regulators about what our business does, about what we add to the community in Texas in terms of jobs, diversifying the energy grid, and helping to build and secure this global public good, as Jack just described. And it's a really fun process, a little bit treacherous, but if it weren't, then maybe I wouldn't have so much value. So in the coming years, I just see so much upsides. I am so optimistic about the future, but to get there, we have to have conversations like this one. So I'm really proud and happy to be here.
Absolutely. So Riot, ticker RIOT. I watch your stock all the time. It's a barometer of how the crypto blockchain industry is doing. So what we're going to do today is we're going to talk a little bit about three things: the risks of Bitcoin, the opportunities of Bitcoin, and then we're going to have some predictions forward-looking about Bitcoin. And so that's how we're going to sort of lay it out. I want to start really talking about the risks. And, Donna, help us understand what are some of the misconceptions of Bitcoins, first of all.
Well, I'm going to change the question a little bit. As anyone who knows me, I would do anyway. Since there's been a lot of talk about Bitcoin, what is the myth, what is the mythology, and what is the fact? So you might say, why are we confused about the regulation of Bitcoin, right? Right, Zach? It falls clearly within the commodities. It's been deemed a commodity. Also, Gensler says it's a commodity, and it's at the CFTC. So end of story. Why do we need a regulation panel? Clear, right? No. And the reason it's not clear is so many things that Bitcoin touches are regulated. Bitcoin touches, for example, exchanges. How should those exchanges be regulated? Zach will talk about startups. Bitcoin touches startups. Startups, how do they get banking? A lot of Zach's clients have exactly that kind of thing. So what we need to know is, what is the clear regulation? Mining is as well. What's the clear regulation so that a public company that deals with Bitcoin can know every day that they wake up and it's not something that they've struggled with anew, but it's a settled issue. So I'll pass it to my colleagues so that they can, since I've mentioned them by name, they can continue on for themselves.
Sure. So a couple of the specific regulatory challenges, I would say, I think that Donna touched on. I mean, one that we're seeing today is, of course, the financial services framework, the financial markets framework. But there's also some other ones that we as a minor touch on. One, Amanda mentioned the Operation Choke Point 2.0 and the banking regulators trying to sort of separate the entire digital asset space from the traditional banking system. It's unfortunately been the wrong way to look at it, and we're trying to educate folks in DC and get that paradigm shifted because, for example, our company has hundreds of millions of dollars of US dollar cash deposits, and we use banks to pay our employees and our vendors and our insurance companies and everything else that any technology business would have. And so having to kind of navigate what's happened with some of the bank failures recently and the way the regulators are looking at the banking system vis-a-vis Bitcoin, that's one regulatory challenge. Another is in the energy and environment space because you've made it when we got a front page hit piece in the New York Times claiming that we are boiling the oceans and ruining the environment. They're looking at end users of electricity and then blaming all emissions affiliated with that use of electricity that really has to do with the generation of electricity, blaming that on us. It's the wrong way to look at it. As the senator said in the previous discussion, we're actually helping to diversify the grid in Texas, and we are a customer of wind and solar produced electricity. So again, trying to change the paradigm. There is the prospect of some very bad regulation in that area. So the financial market space is obviously very important, but there are these other areas like banking and energy use that are also really important regulatory topics for us.
And I would say outside of the mining sector, on the technology side, especially for Bitcoin-focused startups, by far and away the biggest regulatory hurdle is the question of who is a money services business under the FinCEN framework, and then who is a money transmitter and who needs money transmitter licensing. And ancillary to that question is the issue of how we do money transmitter licensing in the United States as a whole. If you're a Bitcoin startup and you fall under this framework, oftentimes you'd be very happy to go to FinCEN, you'd be happy to give whatever information is possible, and you'd be happy to be as compliant as possible. But going state by state through all 50 states and getting licenses will cost you millions of dollars in legal fees alone, will take years in a really fast-moving pace where competitors, especially elsewhere in the crypto space, that got advice from a large law firm to set up a Panama foundation and live in the Bahamas and skirt our rules, they're just going to outflank you. And so if we're going to build real solid technology that's not about dumping tokens on unsuspecting retail customers, but is really about using this financial infrastructure of Bitcoin to move payment and monetary technology forward, we're going to need more workable regulations that you can use to build on top of Bitcoin.
Absolutely. So, let's talk a little bit about regulations now. And I just want to send out a parallel here. How many people trade stocks? Options? Bonds? How about Bitcoins? Don't you buy and hold them? Now, wouldn't you think that if you're going to regulate stocks, you should have traded some stocks? Or if you regulate bonds or options, you should have interacted and traded some options and bonds? Now, how can we regulate Bitcoins if we're not interacting with it or not understanding it, right? So, I challenged the SEC and the chairman, shouldn't at least somebody there really understand the regulations there? And, one of the questions I have for you guys is, what is the risks of this lack of education, this lack of ability to interact with some of these, Bitcoin in particular? I know Gary Gensler used to teach at MIT, so we watched his classes. I asked my students to watch, so he obviously knows quite a bit about it. But shouldn't maybe he hold a little bit, or maybe some people in the SEC hold some of this so they can monitor it? Maybe they can watch the Riot stocks. They can sort of educate themselves more so. So one of the questions I have is, what are the risks on the regulatory side? Is it education? What is it? What's going on here? Why is there such a disconnect here? Yes, go ahead.
I'll kind of leave Gensler out of the picture of the risks on Bitcoin per se, regulatory side. But as we mentioned, or started to mention, there are a lot of regulatory risks. So one big risk to Bitcoin, which is within the context of agencies, is OFAC. Do you have to KYC, AML, individual wallets? Does it have to be, if you're self-custodying, is there going to be a difference? Are countries or governments going to mandate differences between KYC Bitcoin and non-KYC Bitcoin? This goes to what Senator Cruz was talking about in terms of privacy. This is a very serious issue in terms of yourself and how you're going to hold your money and what kind of privacy you're going to require from your government vis-a-vis, Bitcoin as we're talking about, but just generally because it's applicable thereafter. So we also have some products that do, unfortunately, touch within the SEC, and I'm sure Brian can talk more succinctly about this. But for example, we've long been denied a Bitcoin ETF. Why? Because the SEC refuses to allow a Bitcoin spot ETF and is holding over the industry, regulating the exchanges in return, for this Bitcoin ETF. Who has lost? The people that have lost are the millions of retail, well, maybe not millions, but zillions of, I'll use zillions as a kind of a superlative, of retail customers that hold this Bitcoin ETF, Bitcoin, not ETF, but grayscale trust that should be an ETF so that it can go much, much closer to the price of Bitcoin and not trade at a 40% discount. So I think that these are just a couple of the issues of trading, exchanges, custodial wallets, privacy, OFAC, and there's just on, and we constantly are bumping up against somebody new that gets appointed and then is going to change the rules and banking rules and otherwise along the way. So I'll leave it to you guys.
Yeah, absolutely. So just very briefly touching on the OFAC question as an example, I think there is a right way to regulate and a wrong way to regulate. And I think the main challenge here is education, is having the people who write the rules having some basic understanding of the technology. And just using OFAC as an example, there are two ways that you could enforce OFAC sanctions on the Bitcoin network. There is a sensible way, which is to look at certain wallets, right? Certain areas where people are holding Bitcoin that can be correlated through Chainalysis, through work from private companies like Chainalysis or Palantir or government agencies, and you can say, okay, this wallet belongs to the Iranian National Guard, this wallet belongs to ISIS, this wallet's from North Korea, and then you blacklist the act of doing business with those wallets, right? Interacting with an OFAC sanctioned entity, OFAC sanctioned country, OFAC sanctioned individual. That makes a whole lot of sense. Once we start talking about any coin that has touched those wallets is tainted, right, and you start to lose fungibility on the Bitcoin network of the tokens themselves, now we're starting to get to, I think, a nonsensical framework that would be like banning physical dollar bills that had ever been touched by drug dealers, right? And there's some crazy statistic about 90-something% of US dollars have residues of cocaine on them. I think that's especially true here in the District of Columbia. And we don't treat you as a criminal if you hold one of these dollar bills. And so having people who are really clueless about how the Bitcoin network works, writing the regulations, I think you end up with regulations that don't solve our problems, don't make us any safer, and don't get us any closer to our enforcement goals, but really do screw up the promise of this new technology.
So to some regulators and lawmakers who are sort of unfamiliar with Bitcoin and still subscribe to the view that it's just criminal money, if you're afraid of what people can do with Bitcoin, just wait till you see what they do with cash. And that is something that they don't yet understand. And when you look at, there's some UN data that suggests that 2 to 5% of global GDP is used for illicit purposes. Meanwhile, Chainalysis estimates that it's less than 0.25%. For Bitcoin, it's actually orders of magnitude safer. But I want to touch on one thing that the professor raised, which is about the education of policymakers. And there are ethics rules. I had to play by them when I was in the administration. I had to disclose my assets so that, and then potentially the ethics lawyers would make you recuse from certain matters so that you're not actually regulating something in a way that's going to give you a personal financial benefit. So the way that's playing out now is I think that the people who are probably the most educated on our issues may be recused from working on them. There has to be a better way. Disclosure is okay. You can then be scrutinized. You can have blind trust. You can divest from assets. You can, when Michael Bloomberg was mayor of New York, he had his entire, multi-billion-dollar fortune that was controlled by someone else during his time in public office. There's various ways of doing it. Secretary Mnuchin, when he was secretary and I worked for him, divested from certain assets so that he wasn't working on issues that would benefit him personally. But we need to have the people who are educated on these issues working on these issues so that we don't get policy made out of fear and ignorance. And so that's another one of our challenges that we have to make progress on this year and in the years to come.
Well, I think you make several very good points, and part of the education is probably my fault as a professor who's supposed to be teaching cryptos and blockchains. So I offer up, if anybody wants to learn about it, I'm more than happy, and maybe Donna and I can do a seminar on it. I think it's important, right? And you don't really understand how this stuff works unless you interact with it. In class, we actually, do everything on the test net. We walk through how the wallet works. We look at the ledger. Can we find a transaction? Can you find a Genesis block? Can you find Satoshi's secret message? And it is a little technical, I agree. You need a little bit of time to sort of understand it. But then once you sort of walk through it, I've seen, most people with an MBA level education, they can totally understand it. Okay, so that's on us. Now I want to shift gears a little bit.
But I can say, and for many of the people that have been in and around DC for a while, in the last number of years, there are many more people on the staff, in the House, in the Senate that are aware of the broad issues of blockchain, Bitcoin, and digital assets. So I will give a lot of credit to people in the industry that have gone and sought after them and taught them, as well as the people in DC for listening and for being willing to adapt themselves to something new. Some of it did happen during the infrastructure bill, Then you maybe remember that there were all of a sudden headlines on the Washington Post and other places saying that the Bitcoin lobby, the crypto lobby, and a lot about Bitcoin, that they really made an impression on Capitol Hill. And that's when we first talked to Senator Cruz, and he really did learn about Bitcoin then. He understood the differences, and he was very, very enthusiastic and did offer up an amendment for what still remains a bad thing in that legislation that hopefully will get cured when Senator Loomis's bill, who'll be here later, goes through.
Do you guys have any thoughts on the opportunities of Bitcoin?
Yeah, I mean, so this is not so much about an opportunity of Bitcoin. I would say, just as a brief aside, I think that the people who are building in and around Bitcoin are incredible. They face a hurdle that most other people in the digital asset space do not face, which is that they can't print their own currency. And they're competing against companies that are printing tokens with all sorts of promises. And they're bootstrapping businesses. They're raising money from people who have long-term visions. And I really think we should support those companies that are making Bitcoin usable for people all around the world. But then I would say for Bitcoin as a network, one of the promises that it has is that it doesn't face the regulatory hurdles that a lot of these other digital assets have. And so if I were sitting down with a new client, for example, that is not a Bitcoin company, and they want to launch a token, you have to go through this securities law framework based on a 1946 Supreme Court case called SEC versus W.J. Howie. And you apply this 4-part test to figure out, is the asset in question being sold in what's called an investment contract, which is a type of security. And if you were to go to someone working on Bitcoin and you were to apply that to Bitcoin, it just doesn't fit, right? It has these 4 parts. Are people investing money in Bitcoin? Yes. Is Bitcoin a common enterprise? Well, maybe. There's a market price, and so if we all invest in Bitcoin, we celebrate when it hits all-time highs, and we get upset when Sam Bankman-Fried brings it to new lows. Do people invest in the expectation profits? Yes. But the final crucial prong of the Howey test, which asks, is your expectation of profits in the thing based on the essential managerial efforts of some particular group of people, is really what sets Bitcoin apart from everything else in the space. And the reason it's a commodity and most other things are not, and the reason why it is truly different and the incentives around it are different, are really on this particular point, that there is no one entity behind Bitcoin. There's no one key player that's important. Like, it's great that we have amazing companies like Riot in the United States providing security for the Bitcoin network. It's amazing that we have all these startups coming out of the United States that are getting funding and building, insurance and banking and all sorts of incredible things around Bitcoin. But Bitcoin can survive without any one of these players, and it really is a collective effort that requires all of us to be useful, and it is not the product of any one person or one company. And our regulations, to the extent that we have regulations that are Bitcoin focused, really should reflect that. They should reflect what this network can do, and that this is not a tech company, this is not a tech product. This is really more of a foundational technology paradigm like the internet itself.
And I think that if we get clarity out of Washington, better education in the years to come that results in more clear regulations for the financial markets piece, treating Bitcoin as a commodity, being able to trade it, have a spot priced ETF, so that more consumers, more institutions can adopt it, learn about it, get comfortable with it. It's going to be a tremendous unlocking of value for this entire network. And again, it's a collective action issue, but as time goes on, I get more and more optimistic.
Don't forget, we really need to underscore the banking aspect, because access to banking, at this current time is really fundamental. You need to be able to go in and out of fiat at the moment. Who knows what will happen in 40 years. And if exchanges, if companies, if even individuals are denied the ability to go in from their bank account into Bitcoin and back, that's a real problem.
It's also a national security advantage for the United States to facilitate that, to allow people to use the on-ramps and off-ramps. You don't have to take my word for it. Take the Department of Justice's word for it. They've done reports on this. They've gotten very good at using the blockchain to track illicit funds, especially. So if you believe in capturing the value here in the United States and doing that safely, then you need to allow access to our on-ramps and off-ramps. It is good for everyone.
Yeah, I think one of the big sort of misnomers about Bitcoin is it's antithetical to U.S. power, the U.S. dollar, or U.S. national security interests. And again, I think that's totally wrong. On that last piece we were just talking about on tracking illicit funds, there's a terrific piece by Mike Morrell, the former acting director of the CIA, talking about how actually they sort of wish everyone would use this technology to commit crimes because between their chain analytics tools and the other intelligence they have, it's much easier to track than the actual most used vehicle for illicit finance, which is paper US dollars, right? And then on the US dollar sort of hegemony front and on dollarization around the world, I think stablecoins are also an incredibly important technology. I think the Bitcoin network and especially the Lightning Network built on top of Bitcoin is an incredible tool for moving dollars around the world. And we in the United States, especially living in countries with living in cities with good economic prospects, we can have a 401k to have risk on assets like the S&P 500. We can have dollars in bank accounts that are relatively safe. That's not a privilege people have all over the world. And with Bitcoin and with dollar-denominated stablecoins that can ride on the Bitcoin network without the need for a bank account, we can give that sort of same opportunity and economic freedom to people in countries that would otherwise never have such an opportunity. So the stakes are pretty high here.
Okay, no, absolutely. America is the best country in the world. I was born here. My parents immigrated. They lived the American dream, had their kids here, and then we went off and got over too much education, probably. But one of the questions I have here is, didn't we create the internet? And we probably were the ones early to sort of push emails around on this thing called the internet. And you could argue Bitcoin's a way to move digital value on the internet, right? Just like email is. It's a infrastructure sort of play. One of the questions I have is, why aren't we leading the world in all of this stuff? We have the best financial markets in the world. We should have the best innovators here. We should be attracting the smartest entrepreneurs here. Give them a chance to innovate with this new technology, this blockchains with Bitcoins. I don't understand. What am I missing here? Maybe you guys can help me understand DC and the policy and frame this for me, for a business school professor.
Well, I think it's back to what I said. I mean, they're worried. Most of the people in Washington are perpetuating and continuing what has been a long line of regulatory viewpoints and regulatory issues. And so here's something that is decentralized in a city in which everything is centralized. You have centralization of power in every agency, and each one of them delegates or doesn't delegate to another agency, and you have chairman all the way down in each different thing. So it's antithetical to that to some regard. And so there's a worry. And so the easiest thing, as was when the traders on the trading floor were going to be, kind of dislocated from where their little X that they were trading and making their money is, to push back on it. And so we've pushed back with a confusing set of regulations with mixed messages from every different agency and as well as department on a continual basis, irrespective of what party is in power. We saw under Trump, we saw Mnuchin and his unhosted wallets come at Christmas Day, like 2 days before Christmas, and with a due date, 2 or 3 weeks later, which was completely against all kinds of administrative procedures, acts, et cetera. Okay, we stopped that. But so I think that we also push chips offshore. So, I mean, we have some history of pushing something offshore, and then a business grows in Taiwan on chips, and now we're like, oh, wow, we need chips back here. So we're going to create all kinds of incentives many, many years later to do it. So I think that we just need to focus. We need to keep educating, back to your point, educating the people, the staffs, new and upcoming young people. Students are already, they're on this program, so we don't have to do much about them except for know how to be able to give them bite-sized, sound bites to be able to talk to the older people.
Yeah, I think definitely education is part of the solution. I think taking this technology seriously and writing serious legislation and regulation around this technology is part of the solution. But so far, I think we've had this really bad feedback loop where absolutely a lot of this is motivated by fear, right? And we have a lack of clear regulation and a lack of clear application of regulation because of fear, because if we say the rule is X, then people will innovate right around that and our rule won't mean anything. And so then that creates an incredible opportunity for bad actors to flood into the space, right? The Bitcoin network itself is this sort of neutral technology, but we've over the last 2 years seen many, many examples of scammers, grifters, really unbelievable criminals who've moved in to create infrastructure around Bitcoin and have collapsed in spectacular fashion and taken people's fortunes with it. And so then that is the impetus for even more draconian technology or even more reluctance to create a serious legitimizing framework. And so I think we need to just face the issue head on.
So I think that the competition for authority within the United States has taken precedence over the competition on behalf of the United States versus where the value is going to be captured vis-a-vis other countries. And if you look at, particularly for our industry for Bitcoin mining, what are the other countries that have leading hash rates? China, Kazakhstan has a lot. Russia is trying to capture more. And what are they going to do with the value if we cede our ability to compete and to win that value? Things that we don't like. So I think trying to focus our policymakers on the international competition and defending America rather than fighting amongst each other for little bits of regulatory authority would be another great paradigm shift, and I'm hopeful that we can achieve that.
And just bringing back to something that you raised, Brian, states play a big role in this. We don't have a really good federal regime, so you have states stepping in, which is a natural thing for them to do, but they have conflicting different attitudes. So Texas may be friendly today, New York may be unfriendly to mining, Wyoming may be friendly, but we don't know where that will be in 6 months or 6 years. And it's hard for you to run a business in that way. Same thing with the way in which the regulators in New York State, they do a pretty good job, but they're the ones that are looking at the exchanges and not the federal government in the way that we would want, at least to have the option. And I think the Loomis-Gillibrand bill does that, gives you the option between a state or a federal regulator and streamlines the cost that you were talking about, Zach.
Okay, with that, I'd like to thank Brian, Zach, and Donna for a wonderful panel discussion. Thank you very much.